Hey everyone, and welcome back to our series where we dive deep into India's top mutual funds. In this episode, we're shining a light on Kotak Midcap Fund, a scheme that focuses on mid-sized companies with hidden growth potential. The fund aims for long-term capital appreciation by investing predominantly in mid-cap companies, including those at early or developing stages with high growth potential. It identifies hidden growth opportunities in relatively under-researched mid-cap firms that can scale over time. It follows a bottom-up stock selection process using the BMV model, focusing on high-quality businesses, strong management, and reasonable valuations. At the core, it maintains a patient, buy-and-hold discipline, making tactical sector shifts when needed, but remaining primarily anchored in fundamentals and long-term value. If you missed our earlier videos, don't worry. You can explore them by clicking the info button. We've already covered funds from top AMCs like Motilal Oswal, Quant, DSP, HDFC AMC, and many more. In this video, we'll break down everything you need to know, including the fund's basic details, investment strategy, portfolio mix, top holdings, sector exposures, fund manager insights, investment structure, historical returns, risk and return metrics, and taxation. But before we dive in, here's a quick introduction to who we are. We are PA Wealth, a full-spectrum investment firm offering expert guidance in PMS, mutual funds, AIFs, bonds, insurance, IPOs, startup investments, and Dubai real estate. Subscribe to our channel and stay connected with the latest market trends, smart investment opportunities, and expert-driven insights to help you grow your wealth. Let's begin with the basic details of the Kotak Midcap Fund. Launched in January 2013 as an open-ended equity scheme, this fund currently manages assets worth around 57,000 rupees crores with a net asset value of 134 rupees as of August 28, 2025. Moving on to the investment strategy. The fund follows a bottom-up stock selection approach using the business management valuation model. It looks for mid-sized companies with sound business models, strong management, visible growth, low leverage, and attractive valuations. While the primary focus is equity, it may partly invest in debt and money market instruments for stability, using an overlay of macro trends while building the portfolio, seeking hidden growth potential in scalable businesses. Currently, the fund is overweight on IT, chemicals, and consumer durables, while staying underweight on BFSI, metals, and FMCG. When it comes to the portfolio mix, Kotak Midcap Fund allocates nearly 70% of its assets to midcap companies, while also maintaining a 14.16% exposure to small-cap stocks, 14.19% to large-cap stocks, and 2.02% to others. Looking at the top holdings, the fund's portfolio is anchored by leading names such as Fortis Healthcare India Limited, GE Vernova T&D, India Limited, Dixon Technologies India Limited, Mphasis Limited, and IPCA Laboratories Limited. In terms of sector exposures, the fund currently maintains higher allocations towards IT software, auto components, consumer durables, retailing, and healthcare services. Moving forward, let's meet the fund manager of Kotak Midcap Fund. The scheme is managed by Mr. Atul Bhole, who has over 18 years of experience in Indian equity markets. He is a BCom Honours, Chartered Accountant, and MMS, JBIMS. Before joining Kotak AMC in January 2024, he worked with DSP Asset Managers, Tata Asset Management, JP Morgan Services, and SBI Treasury. Talking about the investment details, investors can start a SIP with as little as 100 rupees or make a lump sum investment of 100 rupees. The fund has no lock-in period, offering flexibility, while an exit load of 1% applies if more than 10% of the units are redeemed within 1 year. Beyond this period, there is no exit load, making it convenient for long-term investors. Let's now move on to the historical performance. In the last 6 months, Kotak Midcap Fund delivered a strong 11.08% return, while the Nifty 50 TRI fell by -3.88%, highlighting the fund's ability to outperform even in volatile markets. Over the 1-year period, the fund posted 2.58%, which is lower compared to the 5.17% return of the Nifty 50 TRI. However, since inception, the Kotak Midcap Fund has generated 15.29% annualized returns, slightly ahead of the 15.2% delivered by the Nifty 50 TRI, reinforcing its consistency over the long term. Beyond returns, it's equally important to evaluate how the fund fares on risk-adjusted parameters. The Kotak Midcap Fund has maintained a lower standard deviation, 15.09, compared to the BSE 150 Midcap TRI, 15.84, indicating relatively lower volatility. Its sharp ratio of 1.05, though marginally below the benchmark's 1.07, reflects efficient risk-adjusted performance. Meanwhile, a beta of 0.89 highlights that the fund is less sensitive to market swings, making it relatively more stable during periods of high volatility. Taxation. Finally, let's discuss the taxation of earnings from this fund. Short-term gains. If units are sold within 1 year, gains are taxed at 20%. Long-term gains. If sold after 1 year, gains up to 1.25 lakh rupees in a financial year are tax-free. Gains above this are taxed at 12.5%. Dividends. Added to the investor's income and taxed as per their slab. If annual dividend exceeds 5,000 rupees or 10,000 rupees after April 2025, the fund house deducts a 10% TDS before distribution. That wraps up our deep dive into the Kotak Midcap Fund. If you found this breakdown helpful, give the video a thumbs up and subscribe for more clear, research-backed investing insights. Don't forget to tap the bell icon to stay updated, and let us know in the comments which fund you'd like us to analyze next. Until then, invest wisely and we'll see you in the next video.